Welcome to the Bitcoin.com weekly update. My name is Corbin Fraser. Today is Friday, November 27th, 2020, and this week we're going to be talking all about the Ethereum 2.0 upgrade. But before that, we've got a few other news stories to share with you today. One being PayPal is buying up all of the Bitcoins. So according to estimates by hedge fund Pantera Capital, together with Cash App, the two companies are buying in amounts that equate to 100% of all newly issued Bitcoin. Pantera Capital's latest monthly blockchain letter argues that Bitcoin's current rally is much more sustainable than 2017's because of the rising institutional demand from entities such as PayPal, Cash App, and Robinhood. And a wave of institutional investors causing challenges for Coinbase. So Coinbase has revealed an explosion of incoming capital with its assets under custody currently standing at $20 billion, $14 billion of which were accumulated since April of this year. As Coinbase sees institutional investors adopting cryptocurrency, this inflow of capital has also brought it into the spotlight. This week saw them announcing that they plan to end all margin trading, citing recent regulations by the Commodity Futures Trading Commission, and Brian Armstrong also tweeted out that they're looking to combat potential regulation by the U.S. Treasury directed at non-custodial wallets. Brian Armstrong, CEO of Coinbase, recently tweeted out, "Last week, we heard rumors that the U.S. Treasury and Secretary Mnuchin were planning to rush out some new regulation regarding self-hosted crypto wallets before the end of his term. I'm concerned that this would have unintended side effects and wanted to share those concerns. This proposed regulation would, we think, require financial institutions like Coinbase to verify the recipient owner of the self-hosted wallet, collecting identifying information on that party before a withdrawal could be sent to that self-hosted wallet." There's a whole thread by Brian. I highly recommend anyone interested in these topics to check that out. Obviously, this type of regulation would be bad for any other non-custodial wallet, including the Bitcoin.com wallet. We obviously hope that these types of regulations do not occur, and maybe this is just FUD, but I assume that Brian's probably done his research, and with any luck, we can hopefully combat this and won't have to put through any insane KYC requirements in order to just use the app. Brian Armstrong made some great points in this thread as well, including citing some of the use cases beyond just trading. I think one of the big ones that he mentioned was Eat BCH, which is a non-profit organization that helps feed underprivileged youths in Sudan and in Venezuela. And it's a great program, and one of those things that would probably be hurt by, I suppose, over-regulations of non-custodial wallets. So the European Central Bank cannot go bankrupt. You heard it. President of the European Central Bank, Christine Lagarde, stated this week that the institution could not go bankrupt even if it were to incur losses in the trillions. So Lagarde further stated that normal bankruptcy rules do not apply as it is the sole issuer of euro-denominated fiat. There may be some truth to that as the central bank controls the money supply, but the unprecedented printing of money has many people concerned and adds validity to the use of alternative assets with fixed supply. I think this particular story is just a shocking example of the traditional financial institutions, such as private banks that control money supplies, being able to use these really, really overbearing Keynesian-style economics to just deal with problems rather than finding solutions to the underlying issue. Really sad state of affairs. I hope anyone in the EU is taking notice that the printer is going to go back on and it's going to stay on, and that the money that you have in your savings accounts and your private banks that you feel should be probably pretty safe, that euro dollar may end up being reduced quite a bit by decisions made by people like this Christine Lagarde. So be careful. Anyone with significant savings in, I guess, the European Union denominated fiat dollar should probably consider maybe hedging a little bit into some of these fixed supply assets, such as cryptocurrencies, such as Bitcoin Cash, such as Ethereum. And how could you do that? You can do that obviously with the Bitcoin.com wallet, which we are very excited to share. We have a new feature It's just been released on the Bitcoin.com wallet. So this new feature actually allows anyone to send Bitcoin Cash to anyone in the world using email or a shareable link. So the reason why we're so excited for this is that it allows anyone to send crypto to someone even before they've been onboarded into a wallet application. One of the biggest pain points for onboarding in Bitcoin and cryptocurrency in general is that you typically have to get the user, the person that you're trying to send money to actually install a wallet to give you a receiving address. What we've done is we've built a way that allows users to send money using email, using social media, using Facebook, using Telegram, WhatsApp, you name it. And they have that ability to give them that link, and the user gets to click the link where they are onboarded into our wallet, and the money is automatically swept into their wallet. So it's kind of an easier, more frictionless onboarding ability, but more than that, it's actually a really convenient way to send money to your friends. One of the things that always drives me a little bit bonkers is if I'm trying to pay back a friend, let's say for a dinner out or something like that, I don't like having to ask them for a receiving address, asking them to say, hey, send me your cash address and I'll send you the appropriate amount of funds. It's a lot easier to just send it to their email address, which I've already got saved on my contacts, or drop a link into a Telegram chat where we're already chatting about things, and being able to kind of easily send the money without needing to do that awkward first step. So yeah, I think this is going to be a huge game changer for the wallet, for both our growth, for both users coming into crypto for the first time. We're really looking forward to sharing more information, and you can check out our YouTube channel where we'll have some more videos about this topic. You can also check out Twitter. There's been a few other people sharing some interesting videos, including myself, about how this whole feature works. It's really exciting. But yeah, like I said, you can send Bitcoin Cash now through email. You can put it in some cool gift templates for things like Christmas, birthday, red letter kind of Chinese New Year's, the lucky money. It's a great feature for just onboarding anyone. You can send anyone $1, 10 cents, you name it. If they don't end up taking the money, let's say you sent it to your mom, and mom she didn't click the link. She doesn't have any interest in this crazy cryptocurrency stuff. And you can take that money back, reclaim it, and then regift it. And it's a great opportunity to just ensure that you're not losing money by trying to give some away and onboard more people into this wild world of cryptocurrencies. So go check it out, wallet.bitcoin.com. Great feature to test out, very low fee on Bitcoin Cash. And let us know in the comments, should we enable this on Bitcoin, maybe on SLP tokens? Let us know. We'd be very curious to hear. One concern we have with this feature, obviously with BTC, is just with rising fees on BTC. It does make it a little bit more difficult for this type of transaction to work, but definitely possible. With any luck, if the fees stay reasonable, should still be able to send some BTC through this method as well. And our big story here, Ethereum 2.0 proof of stake beacon chain starts in 7 days. So Ethereum crossed a major threshold this week when they got the necessary number of validators to initiate the Ethereum 2.0 update. So Ethereum 2.0 has been highly anticipated and will be a wide-ranging upgrade to increase the network's scalability and security features. Part of the upgrade is going to change the way Ethereum mining works and will move the network from proof of work consensus to proof of stake. So what does that mean? So the proof of work model was pioneered by Satoshi Nakamoto. This is the guy behind Bitcoin. During the development of Bitcoin, and it relies on a network of computers solving increasingly difficult algorithms to validate transactions and add blocks to the blockchain. This energy-intensive process is the basis of most cryptocurrencies today, especially any of the ones that are using proof of work. So proof of stake, though, means the validators can leverage their Ethereum to confirm transactions. Once a block has received enough validations, it can be added to the blockchain. Validators will then receive block rewards for successful blocks. The Ethereum Foundation said that rewards could be up to 20% of the validator's stake. So in short, this means that the network is going to be far more energy efficient and will allow more people to get involved in the mining process. So some say that this is a great way for spreading more decentralized ability to confirm transactions. Others say proof of stake is all just magic fairy pixie dust. It's interesting, though, to see Ethereum make this big change. It's, I think, one of the first big major cryptocurrencies that has gone from proof of work to a proof of stake, especially with this type of big technology leap that's kind of going on in the Ethereum space. If you're not following Vitalik Buterin on Twitter, I would highly recommend doing that. He's always got some very insightful takes on cryptocurrency and money and these Ethereum updates. I think that the update that they've been working on here for ETH 2.0 has been in work since like 2013. they've been hard at work, and I've been trying to solve these scaling issues that people have known about for quite a while. And it seems like this big kind of threshold that's been hit that allows ETH 2.0 to actually launch is kind of the first step in the future scaling capabilities of Ethereum. So it's very exciting times for Ethereum. And yeah, on top of that, the 2.0 upgrade will move the Ethereum to shard chains, which will allow parallel blockchains to be created in tandem. This alone will increase Ethereum's network capacity from 30 transactions per second to over 100,000 transactions per second. It's a big, monstrous leap. So the transition from ETH 1.0 to 2.0 is set to kick off December 1st with the Beacon blockchain, which will ensure that the main blockchain is relatively unaffected during the upgrade process. So the markets have reacted positively to this upgraded news, and Ethereum is trading above $500 for the first time since 2018, and is up 49% this month. Just this week we saw it jump over $600 for a little while there, and it's kind of taken a little bit of a dive back. But yeah, the fact that it's up over $500 and 49% this month, that's pretty big leap. So if you're interested, be sure to follow at Bitcoin.com on Twitter and be on the lookout for some free Bitcoin Cash from our marketing department. We'll be sending out some of these new shareable links that can be created with the Bitcoin.com wallet to our Twitter followers. And the first one to tap the link ends up getting all of the cheddar. And of course, be sure to update your wallet, the Bitcoin.com wallet, where you can take out this new send flow for a spin. You can grab a copy of the wallet at wallet.bitcoin.com or hop into the app stores, iOS or Android, search bitcoin.com. You should find us there. And of course, try to send some money to your friends and family. It's a great opportunity to show how easy and painless Bitcoin is, and it does kind of allow for potential huge hockey stick growth, both for adoption, for wallets, and we encourage everyone to take it for a spin. So let us know what you think in the comments. We'd love to hear from you. Be sure to follow, like, subscribe, and we will see you next week. Bye-bye.